So without further ado, welcome to our Sunday evening session. So this is actually now part two that we're going to be going through, and this is all about candlesticks and market direction. So we're going to be looking to add on to the content that we went through on the previous session. So you can see the sessions that we've had in green, and you can see that we have gone through the introduction to gold trading before, we've gone through risk management, and we've gone through the types of markets that we can trade as well. So that was covering everything which was to do with like gold, but not only gold, but forex pairs as well, indices and cryptocurrencies as well. And then last session, we actually went through basically how candlesticks work. So if you remember, we had the candlestick pattern right in front of us. I will jump into TradingView and just give you a quick reminder on that as well. We covered how the candle body and the wicks structure is built. We see how we have the open, the high, the low, and the close. And we also actually introduced you guys to the engulfing candlestick pattern as well. And we showed you bullish and bearish patterns on that. And then we started to introduce you to some market structure as well. So that was looking at the highs and the lows. And I even gave you a really cool little indicator where we could actually identify that as well. So just give me a thumbs up if you can see my TradingView screen. Hopefully you guys can see that all okay, no problem, great. So if you remember, just giving you a brief little summary here, we have, for example, here we have what's called a blue candle, which is a bullish candle. We had the candle body, which is the makes up of the difference between the open and the close of the candle. And then obviously during that candle, we have these wicks here, which are either side of the candle. It tells you how high that potential price went in that particular candle, how low that price went, and eventually where the candle closed. So blue candles are your bullish candles, red candles are your bearish candles, which means that if you see more red candles here, it means that market is pushing down, and likewise blue candles means that you're pushing up. Now, in the chat, just give me a thumbs up. Do you remember what the bullish engulfing candlestick pattern looked like? Do you remember? If you don't, then not a problem. I'll show you an example. Hopefully I can get my little circle and I'll see if I can try and build something up like that. There you go, just like that. So this is a bullish engulfing candlestick pattern. It's where you have a red candle followed by a blue candle, but the only difference is that you have the blue candle's body is bigger than the red candle's body. That's all it is. This candle here, the blue one, has got a bigger body than the red. It's engulfed the previous candle body, and it's an indication that price could potentially move upwards. And this particular instance, it looked like it did as well. That's your bullish engulfing. And then I'll show you a bearish engulfing example as well. And we've got a lovely example just here. So I'm going to get my circle pattern, or it's actually called an ellipse. And what I can do is I can literally just go there and give a little circle there. So this is a blue candle followed by a big red candle, and it's where the body of the red candle actually engulfs the previous candle. This is a sign of a potential bearish pattern. All right, so give me a thumbs up if that all makes sense. Now, if that doesn't make sense, don't worry. We have that previous session which will be uploaded onto YouTube. I believe they're still doing some final edits on it, but that was basically a brief summary of what we went through last session. And if you remember, we had this really cool indicator that we added as well. So I'm actually going to just zoom out a second on my TradingView, and I'm going to remind you that we are looking at market structure. We are looking at points where the market has actually changed direction, and where the market has changed direction significantly often indicates where a high or a low have been formed. So I'm actually going to introduce that indicator again. If you remember, it was by Fluid Trades. Absolute legend of an indicator, whoever built this one, and I absolutely love this one because what it does is it actually indicates where price changed direction. So what you might start to see is, for example, if price started to move in a downward trend. So for example, something like here is where you're starting to see a market making a downward trend. Just ignore these horizontal lines for now. We'll go through that in a later session at some point. I just want you to focus on this yellow line and follow it through. Because you can see here, I hope you guys can agree with me, that from this point here, the market was pushing on the upside. Now the reason why is because we've got a low here, we've got a high here. I'm just going to zoom in a little bit on this here. We've got a low, we've gone straight into TradingView, haven't we? We've gone straight into the hard stuff, not even any slides. I told you, like in the future sessions, we're going to be having more content on the charts than we have on the slides. But you know, I will get back onto my slides in a moment because I'll tell you what we're going to introduce into the second session. But just for now, just as a part of the recap, is I've got to make sure that you guys have got the understanding on this. Now, if you guys are beginners, of course, this might not make the most sense at this moment, but this is why you need to revisit the previous sessions. Make sure you've gone through them previous sessions, made your notes on there, and understand really how that content has sort of built up, and that's why we've ended up in this position here. So going back to what we had here, we've got a low here where price changed direction, and we've got a high here. All right. Now this low is higher than this low here, so therefore it's called a higher low. And this point of direction here is called a high, but it's a higher high than this one. So you'd agree that this point is higher than this point, and this point here is higher than this point. So this is what's called a high, higher low, higher high, higher low, higher high, higher low, higher high. And then what happened was that price failed. It made a higher, just about higher low, pretty much even like that one. But what we did not see here, we did not see an extra higher high. If we saw price pushed up here, it would have carried on in what's called an uptrend direction. I hope everyone agrees with that. But what happened here is that market failed to make a higher high. And what happened was it made a lower high. And then it made a new lower low, lower high, lower low. So do you see how the market sort of went in an uptrend here, and all of a sudden, and this is last week Wednesday, the market was in, now it continued a downtrend here. Now even at this point here, where market almost broke this particular point here, it did not, and it continued in that downward direction, and then it kind of finished in a bit of a consolidation here. Does everyone see that? Just give me a thumbs up if everyone can see that, because that might not be the easiest to see, but I'm hoping with the zigzag lines, you should be able to now start to identify a little bit of structure in the market here. All right. So that's where we kind of left it in the previous session. And it was a real fire session, because I get excited when we start to teach more of the juicy content. Like, I know we've got all these introduction sessions, we've got the markets, we've got to go through all the basics, and we do have to cover that, of course, because that is the fundamentals. But when we start to really get into how these markets work and how they move, it's great to see, especially when things start to come together. So with that being said, I am going to go back to my slides now, and I'm going to show you basically what we'll be looking to introduce into this session here. Now, the objective from this session, from today's session, is that we're going to look to add to what we'd previously learned. So what we're going to do is, just in the chats as well, once again, has anyone heard of an EMA at all? A moving average? Right, so we might have a few thumbs up here. There might be people that have not heard of EMAs, all right? So EMAs is something that has been used by many traders out there. Now, just to be important, it is an indicator, but it is a lagging indicator, all right? So with any indicator, most of the time they tend to be lagging indicators. What I mean by that is that price tends to move first, then the indicator tends to sort of follow. So I don't want you to be like an indicator junkie and be like having 30 indicators on your chart and be like, if it meets all my 30 criteria, I'm going to take the trade. You'll be there for ages. So we always try to look at general market structure and use maybe one or two indicators to as a confirmation to get into a trade. Now, what I mean by confirmation is, sometimes you might have heard of it called confluence, right? So confluence basically means that you are adding a confirmation to your trade. Now, have you ever heard Kay in his Telegram channel when he's like, the confirmations are not lining up for me, or, you know, the confirmations have lined up, I am waiting, and once they have lined up, we will look to take the trade. So if you've ever heard that, that's what he's kind of looking for. He's not necessarily using the EMAs, but he's using some confirmations in order to get into a trade. And that's what we look to do as professionals here. We're trying to identify confirmations in the market, which is going to give us an edge. Okay. Now, anyone can look at the chart and you've got a 50-50 chance that the market's going to move up or down, correct? I hope that makes sense. But what you want to do is you want to tip the scales in your favor. You know, when you go to the casino, you got a roulette table, you got black and red, right? You got 50-50 chance of it winning. But imagine that instead of having like even number of black and reds, imagine you've got, I don't know, 60 black squares and 40 red squares, all right? Now, wouldn't you put your money more on the black squares because there's more of them than there are the red squares, right? In order to win. That's kind of what we're looking to do with trading. We're trying to tip the scales into your favor and give you a little bit of an edge in the market. So I hope that kind of makes sense. Now, has anyone heard of Fibonacci or fib levels at all? Let me see if there's anyone in the chat. You might not get as many thumbs up on this one. Okay, one or two. So I'm not going to go through the exact details of Fibonacci, fib levels. It's a maths term. It's something that I did in GCSE maths many years ago. I never ever thought I would use it until I came across it in trading. And it's pretty insane how it actually works. And you can actually look it up. You can go into Google. There's loads of things written about Fibonacci and how it's been used, not just in trading, but in other areas as well. And I'm going to show you a special level that I think could potentially help you with your trading as well. And I'm going to show you that engulfing candle pattern as well, which you already saw in the previous session. I'm going to show you how that actually comes into play, and you can use that as your final confirmation. So hopefully that makes sense. We shall move on. EMAs. What are EMAs? Basically, EMAs is an average price. That's all you need to remember. Average price. And what it is that you have... basically, depending on the number on the EMA that you use. So if I'm using something called a 50 EMA, basically it's an average price line. So imagine you got, I'm going to show on this little screenshot here, you've got all your candlestick patterns here, all your candles, you've got loads of candles here, like hundreds of candles in this particular screenshot. The 50 EMA is this blue line here. Can you see it's like a line? It's almost like an average price line. And you can see, like, for example, like the price is below the EMA here, the blue one, sort of crosses in and out of the EMA, and then it leaves and it goes below it again. Okay, so basically each point in time here is an average price of the last 50 candles. That's all it is. All right, so it's an average price for the last 50 candles. So this point here is the average price of the 50 candles looking back. The 200 EMA is the average price of the last 200 candles. So the line is a little bit what we call flatter here. So you don't need to worry too much about what the exact definition is of an EMA right now. All you need to know is like it's an average price line. Now, what you need to remember is that if you're looking at trends in the market, if you see that this blue EMA, for example, which is the what's called the faster EMA, is below the 200 EMA, but also you see price below these two as well, then we're in what's called a potential bearish trend. All right, so you've got gray line 200 EMA, blue line which is the 50 EMA, and you've got price which is your candlesticks. Candlesticks are below them two EMAs. We're most likely in a bearish trend, and you can see it here, right? You can see that the market was up here at the start of this screenshot, and it's all the way down here by the end of this, and you can see that the price is below the two EMAs. Does that make sense to everyone? Just give me a thumbs up if that makes sense. Getting there. Okay, good. A bit of a delayed reaction. But now if this EMA is, for example, if this blue EMA was above the gray EMA, which was just over here somewhere, and also price was above these two EMAs, would you agree that this would be a bullish trend? I hope so. So what we're looking to see is that's a confirmation for you now. So if, for example, candlesticks are below these two EMAs, then we're in a bearish trend. If it's kind of in between, we could argue that we're kind of consolidating a bit, and but we're waiting for almost the price to sort of go below the EMAs or above the EMAs to give us that trend confirmation. So I hope that makes sense. What I don't want you to realize is that EMAs is only showing you really direction. It's not a form of an entry. I don't want you to be like, oh, this EMA crossed this one. We are in a sell trend now. Let's sell here. And yes, you would have probably made money if it did cross over here, but I don't want you to take any sort of EMA crossovers or anything like that. We're not looking at that as an entry. But what I will do is that you can look at these EMAs now on any kind of time frame as well. So I will show you the charts in a second, and I'll show you how it works. But you could actually look at the EMAs on a higher time frame, like the hourly time frame, the daily time frame, and you can see whether price is above or below, and give you an idea of what kind of trend to be in. And don't you think that that sort of gives that little bit of an edge in the market now? That, you know, if your price is above these EMAs, I'm gonna look for buys. If it's below the EMAs, I'm gonna look for sells. So let's have a look here. I've also got another tip in here as well. So this tip here, watch how price reacts off the 200 EMA. So the 200 is that gray line here. Do you see that price kind of touched the EMA there and it went back down, and it touched the EMA again there and went back down? So that gives you an indication that actually price, as in candlesticks, actually has some respect for these EMAs. It means that there are big institutions out there that actually use some of these EMAs to potentially understand and potentially get into an entry into the market. So with that being said, I'm going to go straight into the charts, okay, and I'm going to get rid of my market structure for now. So I'm going to take you back to what's called a naked chart. You've got your candlesticks on here. and you've got your sessions indicator on here as well. What I'm going to do is that in the indicators tab, you're going to go into indicators and you're going to type in EMA. Okay, when you type in EMA, it's going to come up with moving average exponential. If you just put a star next to that, moving average exponential, that's going to be your EMA that we're going to use. All right, there's loads of EMAs out there, you can use so many more, but for now, let's go with moving average exponential. Once you've added that, it's going to appear on your list on here, on the left-hand side. And what I'm going to do is I'm going to just click visible. I've actually added it twice, so you can add the EMA twice. Okay, so all you do is click on indicators, click on that button twice, and it will add it two times for you. Now, I've already set these up, so I'm going to just get rid of this third one that I added. So I've got 2 EMAs on here. What you're going to do is you're going to go to settings, you're going to go to inputs, and in the length, you're going to put 200. Okay, don't change anything else on this particular element here. Now on the style, you can choose whichever color you like. I like to have like a fairly light gray color for this 200 EMA, and you can decide on the thickness on the EMA here. If you want it slightly thicker, you can. I normally have it on the second thickness normally, but you can do whatever you feel comfortable with. Okay, that's the 200 EMA. Now on the blue EMA, because I've got like a black background, I've kind of gone with a very sort of light blue, almost like a sky blue. That's not to indicate I'm a Man City fan or anything, because I'm not. I'm a red. I'm a United fan. But on the inputs, we're going to go on the length, and we're going to go with 50, which is the 50 EMA. All right. So once you've done that, nothing else needs to be done, and we are good to go. So now you've got your EMAs on your chart here. So what we're going to do, I'm just going to zoom out on this chart, and I'm going to look back a little bit here. So you can see here that when price was above the 2 EMAs, you can see roughly that price was moving upwards, and you've got this sort of element where we're kind of crossing between the 2 EMAs, and then eventually price breaks out again in this direction here. Now you can see that the price is above the blue EMA, and also the blue EMA is above the grey EMA, which means that we are most likely in a bullish trend, okay, in a bullish trend, sorry. So we're looking for buys there. Now, when market comes back into that EMA, we want to maybe pause at this point here because we're kind of waiting for direction here. And then once the EMA crosses over, and now here we've got the price below the blue EMA and below the grey EMA, and we can now decide that this looks like it's going to be some sort of a selling direction here. So I'm hoping that makes sense. Now I'm going to show you again an instance where price comes back to the grey EMAs, respects it, and comes back down. When I say respect, what do I mean by that? It doesn't mean like, oh, I'm gonna, put my hands to your feet or something. No. We're not giving that a full-on respect. What it's saying is that we are seeing price not breaking this particular grey line here. We can see what we call wicks at the top. When we see wicks, it means that price tried to push up, but eventually closed where it closed here. Price tried to push up, closed down here. Price tried to push up, close down here. So it's almost like, look, I don't want to go past this 200 EMA. I don't want to go past this grey line. And then eventually it's worked its way back down. It tried to test it once again. It gave you some wicks here. So where you've got long wicks at the top here, it means that price tried to push up there and it never did. It came back down. Does that make sense? Have I got some thumbs up? Is that making sense so far? Do I need to slow down or do I need to stay where I am? We're good, yeah? All right, beginners, like I said, if you are lost at this point, don't worry. This will make sense eventually when it comes to that right point. Again, just repeat yourself, repeat going through this content, repeat going through the videos. It will make sense, trust me. So again, I am very much inclined to be like, price is below this EMA, below the grey. I'm lined up. You're probably thinking at this point, let's put my house on this. I want to sell right here. No. Please don't do that. We wait for confirmation. We wait for the right entries. But for now, for EMAs, this is what we're looking for. We're looking for sells here, all right? Now, eventually, like I said, when market pulled back, so when the price, like as in the candlesticks, moved in between the EMAs, that's a point where I'm like, especially for beginners, I'll be like, okay, I just want to pause there for the moment because it looks like that downtrend, it can't continue forever. And you're correct, because what's happened here now is that eventually that blue EMA is starting to work its way up. It's working its way up. I know there's a big buy move here. You probably think, why couldn't I buy down here? Well, the thing is that you don't know whether the market is going to continue going down. You don't know if it's going to maybe test this EMA and come back down again. So you wait patiently. A lot of the time in trading, Where we sort of go wrong is that we don't play the patient game. All right, patience is massively key in this industry, and how it separates the amateurs from the professionals. So at this point in time, the EMAs are above. Once again, the blue is above the grey, the price is above the two EMAs. I'm looking for buys here. But then, unfortunately, the buy didn't last very long because it looks like the market is sort of playing around this area. We're waiting, and eventually it looks like market pulled out for a sell here. But it wasn't really too much movement here. And that's what the markets are like. Sometimes it's going to give you a big trend. Sometimes it might give you just a small trend. But that's just a way of giving you bias. Now, I hope that makes sense to everyone, because that's EMAs covered in this little first part of this session so far. So we are all good. Perfect. So that's EMAs. Now, the next one I'm going to go through now is fib levels. Now, I understand that this might be slightly advanced, but I really want you guys to get your head around this. And I really hope that this can help you guys in finding potential entries. Now, fibs, what are they? What is it about fibs? We're not telling lies or anything, yeah? I know it's an old joke. I used it last time, I know. Fibs are the truth, man. It really is the truth in this market. So what it basically does is it measures retracements in a trend. What that basically means that when a market going up or market going down, it doesn't just move in a straight line, right? Market just doesn't keep going up in a straight line. What it does is it tends to sort of move up and down, gives a bit of a higher high, a bit of a higher low, keeps sort of going zigzag kind of thing. Like that's why we use the indicator, the zigzag one, right? But what I want you to realize is that in this particular image here, you've got something called a low and you've got something called a high. Yeah, and you're going to use the zigzag lines to help you out until you start to see it, maybe without even the zigzag lines. But once you got your low and you got your high, what can happen is that price can what we call retrace. So it went up, and it's like, oh, I want to retrace a little bit first before I start maybe potentially going back up again. And what might happen is that price might go down to, let's say, the 50% level. What I mean by the 50% is it literally means that's the halfway, 50% between this high and this low. It's halfway, okay? Now, in Fibonacci, there's what's called a golden number or a golden ratio or golden zone, all right? So you can call it whichever one you like, whatever one you like. I like to call it the golden zone because I think of it like a zone, all right? And that is called the 618, all right? So 618. So the 618 is basically the 61.8%. I don't know why it's that number, all right? But you can look into the 618. It's seen everywhere, all right? So basically, market is just retraced a little bit further than that 50%. It's retraced to what's called the 618. And you'll be surprised how many times you see the market actually retrace back to what this called as golden zone, 618. All right, if you take anything from this session, 618, 618, 618, just take that one in. And what that basically is that it's an area of retracement interest. It's a point where markets potentially tend to reverse or go back to the original direction they were meant to be heading. All right, does that make sense? Do I need to show you on the charts? Of course I'm going to show you on the charts. So when you are going in an uptrend, you go low to high. That's how you draw your fibs, and you're waiting for a retracement to what's called 618. When you're going from high to low, you're waiting for a retracement up to 618, and then you're going to go back down. Okay, so hopefully that makes sense. The only way this is probably going to make sense is I'm going to show you some examples. So before I do that, I'm just going to put it together first of all. Okay, so here we go. This is the slide, the killer slide, before we head to the charts. The A+ setup, the setup that you are going to look for over the next, God knows however long, however long you want to learn. First off, identify trend. Okay, we went through the 50 and the 200 EMA. If you cannot remember what we just did, we literally went through it in the last 10-15 minutes. Please watch this video back. Once the recording is available, you will start to see the 50 and the 200 EMA and how it can identify trend for you. So you'll know from that, number one, whether you're looking for buys or looking for sells. The next one is that we're going to be looking for a key level. So you're going to try and identify your lows and your highs. And that's where we're going to use that really cool zigzag indicator with the yellow line that we had. Okay, so that's when you use that to help us. Then we're going to try and draw a fib level, which is we're trying to identify a potential retracement where market could go, 618. All right. And then what we're going to do, the last one, is that we're going to bring that candle pattern that we had. Remember that engulfing pattern that we had? The candlestick pattern, I went for it right at the start. We're going to use that as your final confirmation, and then that could be a potential entry for a trade. That's all it is. Now, that might seem a lot, especially for beginners. You might be thinking, oh my God, like, what the hell's a bloody fib level? Why are we looking at these EMAs, average prices, all of this? Trust me, if we just break it down nicely, and you will start to see it more and more with anything, is practice. Okay, practice, practice, practice. That's all I can say. In anything, if you want to be a pro in anything, it's about, practicing as much as you can, taking repetitions, reps, doing as much as you can, and you will start to see it a lot more, right? So with that being said, let's go into Trading View. Here we go. So I'm going to introduce you to something on TradingView, a new tool. Now, this might not be available for the basic TradingView. This might be available for the ones that have actually paid a basic subscription to TradingView. All right. So I'm not telling you to buy TradingView. You don't have to do this or anything like that. You can just look back in time. But I've got something called a replay. So the way replay works, I'm just going to take myself out of this. Okay. So what I'm going to do, the way replay works is that we've got our charts here in TradingView. Now, what you can do to help you backtest is that you can actually go back in time. So what I mean by that is that you can click on this replay button. So I might be like replay, start new, and I might want to just move back in time to this point in time here. And what's happened is that it's actually removed all the candles that happened from Thursday afternoon onwards until Friday morning. All right. Now, that's the first thing. And what happens is with replay is that you can actually click on play here. And what it's going to do is it's going to start drawing the candles for you, exactly what happened going forward on the day. So it's almost like back testing, like in real time, but like going back in time. Does that make sense? So has anyone used replay before? Just give a thumbs up if you have used it. If you haven't, then not a problem. You don't it's not a necessary, like you don't 100% need to have this. But if you do happen to have access to it, it's a really great tool for back testing. So what we're going to do is that we've gone back in time. So imagine we're in a time machine and we've gone back to Thursday, the 23rd of April. It must have been a nice summer's day. We've probably made some profits in the market, especially from K signals, been absolutely killing it. And imagine now you've just gone back in time. You think, okay, now let's have a look and see how the market played out. So what we're going to do is that, look, it's what time is it? It's coming towards the evening. So, you've had your dinner, you're heading to sleep, and the markets are just going to obviously carry on going throughout the night. At this point in time, we're thinking, okay, we're in a downward trend at the moment. All right. So what we're going to do is we're going to let the market play out for a bit throughout the night, let it do its thing throughout the night. And we are now on like 1 in the morning. So I'm going to let that play out for now until we get to around maybe 6, 7 in the morning when we start to sort of wake up and see what's happened throughout the night. Now, I'm just going to pause it there for a moment, and I'm going to obviously bring in what's called our fluid trades indicator, the one that had the zigzag lines on there. And we can see on here that, let's have a look at how the market was playing out on Thursday. So you kind of had a clear downtrend on Wednesday. So you had like a series of, you had a high there, you had a low, you had a lower high, a lower low, lower high, lower low, pretty much an equal high, a lower low, lower high, and then we didn't have a lower low here. So that was an indication there was a small uptrend there, followed by a big turn to the downside, a big move to the upside, sort of balance itself out, and then eventually worked its way right back down again. So coming on to Thursday, you see sort of market kind of ranged between here, started to break to the downside, but then gave us a big move upside. There was no sort of clear overall direction. It's like market was kind of playing a bit. So it sort of gave a move to the downside before then pushing up for New York session here. Then you had a little bit of ranging at this point, and then eventually a push down to the downside here. Market retraced back to this level, and then eventually sort of leveled itself out. So it wasn't the most clearest direction in the market there, and you can see that with the EMAs as well. Can you see like we kind of had a downtrend here? So there might have been some sell opportunity somewhere here, but then eventually market played between the EMAs. Then we had a bit of a short-term buy direction here where the blue is above the grey, price is above the EMAs, and then eventually price shot back down. So here we are now, we're into the night. Okay, so we're going to carry on going here, and we can see that price is in a general downtrend at the moment. All right, now what I'm going to do here is I'm going to wait for the next point to get drawn. Okay, so we are now at around sort of 6:37 in the morning here, right? So what we're going to do is we're going to see what market does here. If the downtrend is going to continue from this point in time, I'm expecting price to sort of not break above here. If price breaks above this point here, we're going to potentially enter a buy trend. If it makes a higher, a lower high, sorry, here, and then works down, we're in a downtrend. So let's just see what price does at the moment here. Okay, so now we are around about sort of 7:30 in the morning, and I can see already from this point in time, it looks like price has kind of turned at this point. So what you can do here is now we're going to start to introduce our fib levels here. First of all, at the moment, we're still in a downtrend here, so I'm not really looking to trade at this point, but I'm just going to show you an example of how we draw a fib level. We're going to take, I'm going to just zoom in a bit as well here. Just take rid of that. Everyone with me so far? We good? Cool. I'm trying to make this as simple as possible. At the moment, we're still in a seller's trend here. So I've got the low, I've got a potential high here. Now the zigzag has not been drawn yet, and because what it does, it kind of waits for a few candles in order to confirm that it generally is a turning point in the market. Obviously from our human eye, I'm hoping that you guys can see that we've got some sort of a turning point in the market there. Market's working its way down. So what I'm going to do, a fib level, is this kind of looks like these horizontal lines here. So what you do, when you click on the arrow, it should say fib retracement. Fib retracement. And what you have on there, you've got like a star. I can put a star next to it, so you know that's going to be in your favorites. So therefore I know I've got it just there. Now what you can do is that you're going to, because it's a low to high, I'm going to literally draw from this low here, from the wick to the high of that wick there. All right. Now I'm going to see what price does here. Now in the settings for the fib, just show you the settings. Just double click on it. So there are loads of numbers on here for fib. All you want to do is make sure you've got ticked. You don't really need a 382 to be honest. I might just get rid of that for now. You've got 618, so 0.618, you've got 0.5, and you've got the 1. That's all you need. I always have trend line ticked, so I know which direction I'm drawing the fib in, so low to high. So just keep that on as well. And that is it. All right. So you've got your low to high. Now I'm waiting to see what price is going to do from this level here. If it breaks down, then great. If it decides to bounce off this particular zone here, there's a potential of a reversal pushing upwards. Now I wouldn't take this trade, and the reason why I wouldn't take this trade is because the EMAs don't line up, right? But if you were a bit more advanced, you might want to try and catch that little temporary trend upwards. Obviously that will come maybe with a bit more experience, but for now, let's just let this play out and let's see what happened here. Oh, look at that. So what we have here is we have what's called that respect again. Respect is basically wicks. Yeah, wicks is respect. Not the wick store, I mean wicks on a candlestick. So you've got large wicks here, and it did not break this 618 level, which makes me think, and you know what candlestick pattern this is here? What candlestick pattern is that? Looks quite familiar, doesn't it? Engulfing pattern. Cool. Let's see what price does here. Oh, would you look at that? And eventually the pivot point actually painted as well here. So what's happened here is now actually you had a temporary reversal here. Now, like I said, this is not an A+ setup, because if you go back to my slide, remember point number 1 was identifying trend, right? So if you would have ignored that and you went look for key level, low and high, and the zigzag 618 confirmed candlestick pattern, we've got a 3 out of 4 here. Does everyone agree with that? 3 out of 4? So we've got what's called not an A+ setup. I'll probably say we've got a B setup there. So it's risky. Probably could have taken it, but it was a risk. All right. Now let's just say that you took that, and it's like I said, I'm not telling you that you should have taken that one, but let's say you did take that and you entered as soon as that candle closed. All right. Now, do you remember the short and long? I'm hoping that was in a previous session. You guys would have seen that. And you know, TradingView actually did an update after my session as well. You know, I've been waiting years for this update. They've actually put an L there and put an S there so it tells you whether it's a long position or short position. Such an easy fix, and they waited years to do that. So now, because we're trading on gold here, now when I draw the long position, now what we tend to do is that we normally go, if you look on K signals, roughly what kind of stop loss does he tend to have? He normally has around maybe, it depends on obviously the risk on the market. Sometimes it's 6 points, sometimes it's 8 points. So we're going to go with 8 point stop loss. okay, which is just about there. I've got 8.01 points. What I like to do here though is that I like to move my stop loss slightly below this low here. I like to be just out of the way of where price has been before. All right, so I'm maybe going to go for about 9 point stop loss, yeah, just to be on the safe side. Now TP1, you could have had TP1 usually at around maybe 3 points. So TP1, let's say it was about around here, you would have maybe secured some profits here, and that's good because you would have seen price hit this particular EMA here. And remember the EMAs, they often are respected in big institutions. Price could have reversed out of there and taken you out at entry and carried on maybe to the downside. All right, so it's very important, obviously, as you know, to take profit from the markets. TP2 might have been about, let's say, 6 points, and you would have hit TP2 there as well. My initial projection, if I was looking at that and I saw this setup, right, I would have been targeting previous structure. So what I mean by that, the previous high, and I would have gone just below the previous high. Now what that gives me here is a really good risk to reward ratio because it's above 1. Do you remember risk to rewards? Put a thumbs up if you remember risk to reward. Good, we got a few in there. We got a few. So you're risking 9 points to make definitely more than 9 points here. We're going to look to try and make 12 points here, which is 120 pips, 120 pip move here. And obviously at this point here, you would have probably taken from the price of 4675 all the way to around 4687. You would have taken probably at least TP2, TP3, and then maybe aiming for a TP4. Okay, so then what you do there, you can just carry on looking at previous structure. My next target would have been the gray EMA. So I would have been looking around there. Okay, and I will introduce you to something called a trailing stop loss as well. That will come in more of our advanced sessions as well, where you can actually, you know, when you have like a TP5 tends to be open, right? So, and you know, in some of the K signals that we've had, what's it called? Some of his, after TP4, you have TP5 as open. So you can leave the market, you can leave a little bit in the market to keep running. So I really highly recommend that you can do that because definitely last week Kay caught some really big moves. Even the afternoon educator as well. I think we managed to catch like some 250, 300 pip moves. All right. So and that will go really well in your performance in the market. So I'm going to let this play out and let's just see what happened. Did it actually respect that grey? Because remember, we're looking for if price is going to bounce off this grey line and continue down, or is it going to bounce and push upwards? Let's see what happens. It's hit it a few times. Almost wanted to break. And it's fighting it. It's fighting it. I've got a new high here though, which is great. So what I can do, again, I can do the same sort of thing, right? So do you remember that fib? I'm going to get rid of this fib now. We're done with that one. So let's just say I've got my new low and my new high. I'm going to draw again. But remember, like I said, risky because we are not in... we haven't got the EMAs in our favor at the moment. We're still waiting for this blue EMA to go above the grey to give us the buyish trend, and then we can look for buys like as A plus setups. At the moment, these are what we call B setups. So I'm going to wait and see what price does. Does price hit it? It does hit that 618. Is it going to give us an engulfing pattern? It's not giving us even though price bounced off the 618, it did not give us our engulfing candlestick pattern. So in this scenario here, no trade. Everyone with me so far? Everyone still with me? Is this good stuff? Or yeah, no, we're good. We're good. All right, nice. Awesome. I love this, man, because you're going to see so many examples of this. You will literally see so many examples of this. So I know we're going a little bit over on time. I hope you guys are okay for time. We haven't got that long left. So I'm gonna really wrap this up nicely for you guys as well into a nice little present. So we saw some respect here on the 618 level. Okay, I thought price was going to break down here. We're on what, Friday lunchtime now, and so New York hasn't opened yet. But what we've got here now, we've got a new high. So we had, if only we had the engulfing candlestick pattern here. In live markets, you'd be like, ah, oh, damn it. I wish that candlestick just closed a bit higher. I would have had the engulfing pattern. I could have taken that trade and gone up. So it wasn't meant to be. The market didn't give us what we wanted. So that's cool. We move on. So let's see what we've got here now. All right. So we've got a new low here now. We've got a higher low. So now we can look, just to zoom back for a second. Oh, we've got a low, a high, a lower, a higher low, a higher high, a higher low, a higher high. Oh, nice, 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 nice. Okay, so this is Friday. This is 24th of April. This is live markets, guys. This is only literally a few days ago. So, okay, what I'm gonna do, I'm gonna get my fib level again. Low. That's the current high at the moment. If that high keeps going up, I'm just gonna keep moving my fib level up. I'm waiting for a turning point in the market. Market's shot up, right? This is like just before London session. I'm waiting for price to retrace. Give me a little engulfing pattern here and I'll be good to go. I'll be good to go. That's what we're looking for. So let's have a look. All right. So price has definitely bounced off that zone now. The line has been drawn. We're good, man. We're waiting. This is when, for example, someone like a K you might see in the chat, like, look, we're just waiting now. We're waiting for price to come back to my zone or waiting to come back to my level. Oh, hello, hello, hello. So what have we got here? About 1:50 p.m. 1:50 p.m. We've got a bounce. We've got two wicks here. We've got the respect. We've got the wicks. Let's see. Let's see. Now we're just waiting for an engulfing candlestick pattern. Is it going to give us an engulfing candlestick pattern? Where's the engulfing? Oh, we've got another respect of the wick. Oh, we've got the engulfing candlestick. Damn. What should we do? Should we go in? Shall we go in? Oh, I don't know. Shall we? Yeah, I think we should. Okay. So now the only thing that frustrates me with this one is that it's quite a large stop loss here, right? Now I know we normally go maybe 6 to 8 points on a stop loss, but everything's lining up for me. Look at the EMAs. Okay, the EMAs are not the greatest. Okay, you got the blue, the gray. The blue is above the gray line here. This is a little bit hard to see because let me just hide my drawing for a moment. You can see here that you got the blue is above the gray. So we are technically looking for buys. It's not the strongest trend, but we are looking for buys now. We've got the engulfing candlestick pattern. We've got the respect from the 618. That 618 has been respected. We are good. But like I said to you, my stop loss, I like to have my stop loss below previous structure. So it is a large stop loss here. It's about 15 points. All right. So some of you might not be comfortable having that, but what you have to do there is obviously reduce your lot size significantly. So we're going to go in with a small lot on this one, a small lot, and we're going to target a previous structure. It's not the greatest risk to reward, but I'm going to look out and see if we've got any other previous structure anywhere. Have we got any other previous structure? Yes, we have. We've got some points there. So we have got potential upside potential here going as high as this. So let's just see how this one plays out. Now, like I said, I like to have my stop loss outside previous structure here. So let's just see what happens here. Let's see what it gives us on the entry. Okay, so we're moving into profit here. And you can see actually that price touched the previous high there. And that was for our entry was at 4704 to 4717. So we've made some significant profits already from this particular trade. Let's just see how it plays out. Oh, damn. Oh, okay. That was a good trade. I didn't expect that. So that actually price has shot up from that entry into our favor there, and actually went and targeted previous structure, which was literally just here. So that was, how big a move was that one? So it was 4704 to 4738. I would probably say that's over a 300 pip move there. 34 points, 340 pips. I don't know if that's luck or not. I don't know. But all I know is that this was an A+ setup. Everything was in my favor here. If you go back to the slide, I had the EMAs in my favor. I had the high and the low. I had the 618 level, which was the pullback. I had the engulfing candlestick pattern. Everything played out for me. Now, I don't know how confident you feel with drawing something like this up. And I understand it's 8:47. I've gone way over my time, right? But the reason is because I really, really wanted to show you this and see it work in the markets. Now, this doesn't happen all the time. Okay, there's going to be times when that's just going to hit your stop loss and probably go the other way, right? But what I've shown you, hopefully, is just something, just a slight edge in the market that if you just went away now and just practice this, you know, over the next week or so, don't even take the trade, right? Literally, that's me telling you, like, don't even take the trade. Or if you want to take it, just take it with a very small lot size. I would rather you draw this up maybe like 20 times, right? Get used to it, see it, and see how it plays out. Now, this is on gold, M5. You can take a note of this example here. Gold, M5, and it was Friday, 24th of April, 2:35. I took that trade. Okay, and that's basically what happened. Should we just play out and see what happened? Where did market go eventually? We had that previous structure targeted. It probably went back down to entry, didn't it? Let me just see where we're going now. Okay, cool. So it kind of played around in that area. It was still, price was still above the EMAs, and obviously towards the end of the day on a Friday, markets tend to just sort of shut down. But yeah, that's how it kind of played out really on the Friday. Went down to probably entry. Nice one. I'm so sorry that that was really kind of heavy on TradingView, and I know it was quite heavy for some of the beginners here. I hope you guys got some benefit out of this particular session. It was a little bit hardcore, but if you want to take a screenshot of this, these are just some examples that I picked out from Friday. So the one that we went through was the second one here. That first one, this is how backtesting is done basically. I'm kind of fast forwarding a little bit here, but this is 24th of April, gold, M5 time frame, which is the 5-minute chart. 750 was that initial entry I think I showed, which I did say, I put in the notes here, risky because it's against the EMAs. The other one was an A+ setup, all right? And I've got a few more here. These are on the M3 charts. Basically, the lower the time frame you go, like M3 candles, that you got more candles in a day. The problem is that the market can be a little bit more volatile in the shorter time frames. So just be careful with that. I'm just doing it just for examples. I want to show you that this works. This basically works on any time frame, any pair, pretty much most times of the day. The probably more setups you'll get will be in the, like I said, London, New York, the times that we normally trade. London, New York, when it's most active. Just think about them levels that I've just shown. So yeah, if you've got a screenshot of that, that's great. Now that's kind of like what I want you guys to do, right? I mean, look, I've got 111 people still on this call, right? So there'll probably only be like a handful of you which will probably take this and run with it, right? And that's fine. That's just the law of numbers. But if you really want to take this skill, like what I'm giving you here is literally like stuff that I've paid for. You know, it's knowledge that I've paid for in the past. I've sort of put it together into something that I feel is really, really useful for you guys. And, you know, you guys are lucky because you're getting for free, right? So, yeah, I hope this source has been really valuable for you guys. Common mistakes. Don't use EMAs as your only way of entering the market. All right, so use it as a confirmation, that's all. Treating the fib as an exact level, no, it's not a level, it's a zone. Don't just enter the markets as soon as the market has hit that 618 and be like, oh, I'm buying. No. You wait. If it doesn't give you what you want, don't take the trade. And that's exactly my third point there, forcing trades without enough confirmation. Do not force the trades without the confirmations in your favor. Takeaways and conclusions. I'm hoping now, after this session, even if the worst comes to worst, the one thing that you take away from this session is just the EMAs. At least you have an idea of direction. 50 and 200 EMAs. Just add them to your chart. Watch the charts over the last few weeks or so and see how they play out with the market. All right. The fib levels. Now that could maybe take some time. If I need to go through that again in another session, I'm happy to do that. No problem. I kind of went through it literally very quickly in 5 minutes, but I showed you how to draw a fib level, how to identify when price has gone back to that level, and I hope you take away respect is wicks. Yeah, wicks is respect. Candle confirmations, engulfing, candlestick patterns. We went through that in the previous session. We briefly went through it in today's session as well. That is one candlestick pattern. There are many more candlestick patterns that you can use, and I encourage you to look online and have a look because there's loads of them. But we just went through the engulfing one just as one candlestick pattern, and you saw how you could use that to enter the market. And then we brought it together, didn't we? We brought it all together into your confirmations. So it was a beastly session, and I really wanted to cover all that before we sort of closed off this session. And just to let you know, our next session will be session 6. But just to let you know, I am actually away on holiday because I definitely need a holiday. And we'll be back. I think most likely will be the 10th of May. But just look out on the chats for that one. And that's the reason why I wanted to kind of squeeze this in before I went away. And so yeah, look out for the next session. Will be 10th of May, and that'll be on support and resistance as well. But what I've actually, I am not one to give homework, right? And I'm not going to give you homework, but this is just for those that want to do this. If you want to, you know, that table that I showed, something like that, just create your own table. Like you can write it down on a notepad or in Excel if you're using Excel or Word, whatever it is. Just create a table and just write down the date, the symbol, the time frame, and the potential entry, what it is, and just some notes against it. Did it tick all the confirmations from this particular slide here? And yeah, and you know what I might do is in the chats, in the next time, what I might do is I might do like a full-on Q&A, where I'll actually, like, if you just give me some examples, I'll go through and actually almost like kind of mark it, not like like a teacher, but I'll just like say, look, yeah, that was a good setup, or no, that was not a good setup. Would everyone find that useful if I sort of did that? Because that way, I guess you guys are practicing as well. So yeah, I'm happy to do that, no problem. We can do like a live kind of session like that, looking at potential setups. Because that's the only way you're going to learn. I can go through slides like, you know, forever, and I don't want to do that. Like, I just want to give you the content, and for you to kind of just go away and sort of, yeah, take this all on board. Thank you once again, and I'll see you guys in a couple of weeks. Have a good one. Take care.